everybody. Trust you're doing great. We're into a wonderful and new week. It's another weekly commentary on the God of Indices channel, right? We do our best to make sure we give value to the Forex community, right? So on a weekly commentary, we're trying to tell you and anticipate the bias of price, the bias of the week or the bias of the day, right? So before we go into it, I'd like to tell all of you, if you're watching us for the first time, if you have not subscribed, or you're watching us and you have not subscribed yet to the channel, please support the channel, subscribe and turn on not your post notifications so you'll be the first when we are up online, right? We plan to give more value in the coming months and in the coming weeks ahead, right? So you don't want to miss when we pop up, when that one of that strategy video drops, or that important video that is going to transform your trading drops on this channel. So we get right straight into it, right? It's in the morning. We like our custom is, we always would like to analyze the GU, right? Like I told you, GU is almost 90% correlated with EU, right? So they move in the same direction, and GU is inversely correlated with DXY. So if you're a fan of DXY, you know that this our analysis will be the inverse on DXY, right? Right. So I always advise that anytime you analyze GU, always look for at EU for divergence or correlations that will really validate your directional bias. So this week's commentary, we want to pop straight right into it, right? Pop straight right into it. So we firstly, like our custom is on the God of Indices strategy, or on our channel or our trading style, we always want to look at the weekly to see what price is telling us, right? Remember last week I told you that there's a high probability that we're going to get a bearish expansion for last week, which we did. So if you capitalize on that for directional bias and you got profitable trades in that direction, wow, so good for you. So this week we're seeing that, right? From looking at the weekly time frame right now, from what I can see, I still see that we are most likely to continue in the bullish direction. Why are we likely to continue in this direction? Because looking at the weekly time frame, we see that we have gotten this steep retracement that took out this old high here, right? And after taking out the external liquidity, we have not retraced into the internal yet, right? But we have been feeling all inefficiencies, right? Going upward. You can see from here, we've been feeling all the inefficiencies, right? All the fair value gaps, we've been feeling them, and price has been imposing to the upside, right? But currently, we see after doing this and taking out the previous high of this candle, we see that price there's low or very low willingness for price to continue going to the other side. So that tells me that most likely these old lows now will become part of liquidity that price will be looking out to run, right? Price will be looking out to run. There's a likelihood that price wants to reprice down to the discount of this range, right? Want to reprice to the discount of this range, like below 50, which is our equilibrium. That's a discount. So most likely price want to come to equilibrium or reprice to discount. Right, but we can never tell. We're not 100% sure. We just want to move in the direction of what price presents to us. That's the way you trade. You trade by anticipating price, but you don't make your decision by the anticipation. You make your decision based on when the hand price deals you, when price shows you it wants to move. That's when you make your decision for trading. So the likelihood of price wanting to take out this sell side liquidity is very, very high for this week, right? But if we start for the week, most likely it might be a liquidity run and price will impose to the upside. So we might likely see something like this. We might see us taking the liquidity coming into this fair value gap here, and price will impose to the upside. This is a possibility. Or we can see price also just continuing to the downside to go to equilibrium, then continue, because overall we are bullish. We have turned bullish, right? We've broken structure to the upside on the weekly time frame, so we are bullish on the weekly time frame. So let's go to daily to see what we're seeing on the daily time frame. Let's go to daily to see what we're seeing on the daily time frame. So we see that point of liquidity where I marked out here, right? This is the sell side liquidity that most likely the price is targeting, right? This is where price is targeting, right? So price has come into this OB, this daily order block. So we are right now are into this daily order block, right? So most likely we'll see the reaction of price, right? This is what I always say. You always want to watch for the reaction of price. You want to watch for the reaction of price and this daily OB to see if the start we are just going to get a reaction and then the next candle for the next day will just continue in our upward movement, right? Because this we have this high here, the old high here, which is the buy side liquidity for bullishness where price is likely targeting, and this is our sell side liquidity where most likely price wants to draw to. That's our most likely draw on liquidity for the short term, right? So this is our sell side liquidity we're looking for, right? So this is our view for price. Now there are two things that I'll be watching out for. The major thing, the major form of resistance for price will be right, because if we're looking at price right now, we're seeing that we have an inversion fair value gap here, right? The price broke through, right? So this and the other block would have served as a form of support for price. But we are seeing here that the last daily candle closed below the consequent encroachment of this. So it's the likelihood that we are going to trade through, or we have already traded through this inversion fair value gap. And as soon as we close above, and the next line of defense for price will be the order block here. As soon as we close below that order block, it tells us we are ready to head down, and this will be the next point of call, right? This is the next point of call. We might likely get resistance and a rejection of this OB here, but this will be the next sell side liquidity that price will be targeting going into this week. Like we always say in the God of Indices trading group, right, that we always trade the direction we trade. We use our daily time frame to day trade and scalp the movement, right? So we're not swing traders. And right now, it's not actually a good time for swing traders, right? Because with everything happening in the world, with all the wars going on, Israel and the ceasefire negotiations with Israel and Iran and everything happening with Russia and Ukraine, right? There's a bit of uncertainty in right now. So holding positions for long period price, you can see that you are deep in profit, and the next day you see something happens and you're back in drawdown again. So it's not a very good time to swing trade. However, it's still a possibility for you to swing trade, right? So this is what we are looking at this week, right? So right now we're seeing that if the first possibility, this liquidity will be taken out, then price will come deep into this OB, can reject and go upward, right? Then we'll also have a possibility that price will just keep going downwards for the day, right? So thank you so much. To ensure to subscribe and like the channel to make sure we give value to our community here. Thank you so much. Have a great and wonderful day. Stay blessed.